Uh, Ajay, I want to talk to you about the next generation reforms the market is trying to figure out would be coming from the government. Yesterday, we got a glimpse of that in the commentary coming in from Finance Minister. So much of work is happening. Will it be continuity of more of the same, or could there be some surprise which the street could be, watching out for going forward in the new term of Mr. Modi?
I don't think there'll be surprises because I think one thing the government very clearly has learned that whatever they've done, one can argue some are good, some are bad, has resulted in a very strong equity environment in the country. And that's a domestic equity environment, which has meant what? Which has meant that hundreds of companies which are struggling to raise capital, were living on debt, are now able to pay off the debts and go on the equity spree. And I think that's the greatest success story of 2023 is those hundreds of marginal companies who could never aspire to raise equity are raising hundreds of crores of equity. Now, what happens when you raise this equity? Your debt goes down, risk goes down in the system, your ability to build the market share goes up, and therefore you can compete in the market. So I don't think the government policy will change at all because whatever they've done so far has worked well for, as I keep saying, for most of the people. You're richer, you're feeling better, your consumption is better at this point of time, your equity culture is booming at this point of time. There's no need to change it because what you have done is taken the reliance of companies away from debt instrument and banks and move it to equity, and which is, it's not zero cost, but it is certainly zero risk money that your companies have. So I think fundamentally, for the equity market, the focus will remain. And that is why we said that the themes which relate to equity markets will continue to bounce, whether you're talking of AMCs, whether you're talking of depositories. I think they are going to have a much, much bigger run in the next 5 years. Because if the government supports more of this equity culture, and they've done it already by saying that unlisted companies should also have shares in depository, for example. That's one of the things that they have introduced in legislation. Now, that is a precursor to opening up the market much more to private trade, etc. The fractional sharing of real estate. So I think fundamentally the policy will remain the same. And what important for us to understand that debt returns this year could become as good as index returns because this government, if it comes in power, is not going to borrow excessively. They don't need to buy out voters at this point of time, which means that the fiscal deficit going down, the greater chances of interest falling, assuming that the US interest rates also come in line, is for the Indian investors. So I think if you ask me personally, this year, 2024, gilt returns may even exceed the index returns on equity, given the fact that we expect in the second half interest rates should start to come down quite substantially.